The attribution of debt liabilities to institutional sectors in many cases is straightforward, as there is only one resident, the debtor, involved in the transaction. However, in some cases, the institutional sector of the resident debtor may not coincide with the institutional sector of the resident transactor. This is applicable to debt securities when the issuer, which is the debtor, may be a resident in one institutional sector, the seller of the debt security, which is the transactor, may be a resident in another institutional sector, and the buyer, which is the creditor, is a non-resident. For example, suppose that a non-financial corporation resident of country A issues a debt security that is purchased by Bank A, also resident of country A. Bank A then sells the debt security to a bank resident of country B. In this case, from the point of view of country A, the resident debtor is the non-financial corporation, which belongs to other sectors. However, the resident bank that is selling the debt security to a non-resident, that is the transactor, belongs to the deposit-taking corporations except the central bank sector. Consequently, when the sector of the resident debtor does not coincide with the sector of the resident that owns the asset, who is the transactor, there are two possibilities for the attribution of the institutional sector: the institutional sector of the debtor or the institutional sector of the transactor, the owner of the asset. In external debt statistics, for the attribution of debt liabilities to institutional sectors, the sector of the debtor is the one that determines the classification by institutional sector. This is because the obligation to extinguish the debt liability at the maturity of the debt security remains with the issuer and not with the transactor. Therefore, in this example, the debt security liability should be attributed to other sectors. Let's look at another example and assume that Company A, resident of country A, contracted a loan from a non-resident Bank B. The loan was guaranteed by the government of country A. In this case, the attribution of the loan liability by institutional sector is done according to the sector of Company A, which is other sectors, and not of the guarantor. However, if Company A fails to repay the loan according to the payment schedule, and the guarantee is activated, the external loan liability will then be reclassified to the sector of the guarantor, which is general government.